Hey everyone! Welcome back to our channel. Today, we're diving into a topic that many of you might be curious about. Can I withdraw from my retirement accounts early? Whether it's a financial emergency or a big opportunity, we all want to know our options. So, let's break it down. But before we get into the details, let me ask you this. What would you do if you found yourself in a tight financial situation? Would cashing out your retirement savings be an option you'd consider? Let's explore the ins and outs of early withdrawals from retirement accounts. First things first, let's clarify what we mean by retirement accounts. The most common types are 401s, IRAs, and Roth IRAs. Each has different rules regarding early withdrawals. For instance, if you're under the age of 59 and a half, withdrawing from these accounts typically comes with penalties and taxes. So, what are the specifics? Let's start with 401 plans. If you withdraw money before you hit that 59 and a half mark, you'll typically face a 10% early withdrawal penalty. On top of that, you'll also owe income taxes on the amount you withdraw. For example, if you withdraw $10,000, you could end up paying around $2,000 in penalties and taxes, depending on your tax bracket. However, there are exceptions. If you're facing financial hardship, some plans allow for hardship withdrawals without the penalty. These might include expenses for medical care, purchasing your primary home, or even avoiding eviction. But remember, you still need to pay income taxes on these withdrawals. Now let's talk about IRAs, which include traditional IRAs and Roth IRAs. With a traditional IRA, the same penalty and tax rules apply as with a 401. Withdrawals before 59 and a half usually come with a 10% penalty plus income taxes. But here's where it gets interesting with Roth IRAs. With Roth IRAs, you can withdraw your contributions at any time without penalty or taxes. This is because you've already paid taxes on that money. However, if you want to withdraw earnings, you must wait until you're 59 and a half and have had the account for at least 5 years to avoid penalties and taxes. To summarize this part, with a 401, early withdrawals usually incur a 10% penalty and taxes. Traditional IRAs have the same rules, but Roth IRAs allow you to withdraw your contributions anytime without penalties. But what if you really need to access those funds? Are there any alternatives to consider? Absolutely! Instead of withdrawing, you might want to consider taking a loan against your 401. This can be a viable option as you're borrowing from yourself, and you won't face the early withdrawal penalties or taxes. Just keep in mind, if you leave your job, you may have to pay that loan back quickly, or it could be treated as a withdrawal. Let's say you're in a tough spot and need to come up with cash for unexpected medical expenses. You might consider this loan option. It can be a great way to access funds without the hefty penalties of an early withdrawal. But always weigh the risks and have a plan to pay it back. Before making any decisions, here are a few final considerations. Assess your needs. Is this a temporary crisis or a long-term financial challenge? Explore alternatives. Look into loans or other ways to generate cash. Consult a financial advisor. They can help you understand the long-term impact on your retirement savings. In conclusion, while early withdrawals from retirement accounts can be tempting, they often come with financial penalties and long-term consequences for your retirement savings. It's crucial to explore all your options and understand the rules surrounding your specific accounts. If you found this information helpful, please give us a thumbs up and share it with someone who might need it. Don't forget to subscribe for more insights into personal finance. And remember, planning for your future is always worth it. Thanks for watching, and I'll see you in the next video.